Hey everyone! Today I'm diving deep into Indemo, a unique real estate investment platform that's been making waves in the P2P space. If you're looking to diversify your real estate investments beyond traditional platforms, this one might interest you. What makes Indemo special? They offer something I haven't seen elsewhere: investments in Spanish discounted debt backed by real estate. Plus, they're fully regulated by the EU, which adds an extra layer of security. By the end of this video, you'll know exactly what Indemo offers, how safe it is, what returns you can expect, and whether it deserves a spot in your investment portfolio. Let's get started. Indemo is an investment platform that allows you to access real estate assets on the Spanish market. Unlike most platforms that focus on traditional mortgage loans, Indemo offers two distinct investment types: mortgage loans and discounted debt investments. The platform launched in 2023, but the founders have been working on this project since 2021. They're based in Riga, Latvia, and here's what makes them unique. They give you access to a market segment that's typically reserved for institutional investors. So far, they've reached 12 million euros in assets under management and have processed 1.7 million euros in total repayments to investors. That's solid growth for a relatively new platform. Let me break down the two investment types because this is where Indemo really stands out. First, you have traditional mortgage loans. These work like most real estate platforms. You invest in secured loans tied to Spanish real estate properties. The loan-to-value ratios are typically low, which means good security for your investment. But here's where it gets interesting: the discounted debt investments. These are loans where the original borrower failed to make payments. Spanish banks like Santander, BBVA, and CaixaBank sell these loans at significant discounts, usually around 40% off. When you invest in these discounted debts, you're betting that when the property is eventually sold, you'll make a profit from the difference between what you paid and the actual sale price. It's a unique opportunity that's usually only available to big institutional investors. Now let's talk numbers because that's what we're all here for. For mortgage loans, you can expect up to 10% annual returns. But the discounted debt investments are where things get really interesting. Indemo advertises an average annual return of 15.1% for discounted debt investments. But here's the kicker: their actual performance has been even better. For assets that have been sold so far, they're seeing an average annual return of 25.3%. That's significantly outperforming their moderate scenario projections. Of course, these are early results, and past performance doesn't guarantee future returns, but it's encouraging to see them exceeding their own expectations. Safety is crucial when choosing any investment platform. So let's dive into what protects your money on Indemo. First, they're fully regulated and supervised by the Central Bank of Latvia. This means your funds are protected up to 20,000 euros by the EU Investor Compensation Scheme. They also have passports to operate in several European countries, including Germany, where they're listed in the BaFin database, and Spain, listed in the CNMV database. All investments are secured by real estate collateral. For mortgage loans, the low loan-to-value ratios mean there's a substantial buffer if something goes wrong. For discounted debt, the price-to-value ratio shows you're buying at around a 50% discount, which provides significant downside protection. Importantly, all properties on the platform are fully built and operational, no construction or development risks. They focus on residential properties like apartments and houses in liquid locations across Spain. Indemo doesn't just throw any property onto their platform. They have a rigorous selection process where less than 10% of available debts make it onto the platform. They work with professional servicing companies authorized by the Bank of Spain. These companies conduct both internal and external valuations, and there's a decision-making committee that carefully assesses each opportunity. They focus on geographical factors like populated areas with strong recovery potential, economic conditions, and urbanization trends. They also conduct thorough reviews of mortgage agreements and legal status to identify any potential risks. For property valuations, they use independent appraisers like Idealista, Tinsa, and Thursa, well-known names in Spanish real estate. Getting started with Indemo is straightforward. Account opening and verification took me under 5 minutes using Verif Identification Service, the same system used by established platforms like Mintos. The minimum investment is just 10 euros, which is much lower than most real estate platforms. I really like their investment map feature where you can see exactly where projects are located geographically. They recently partnered with LHV Bank, which allows instant SEPA deposits, so your money reaches your account immediately. Withdrawals are quick too. I got my money back in just 2 days when I tested it. They also offer an auto-invest function if you prefer a hands-off approach. The team behind Indemo has solid credentials. CEO Sergei Zviskovsky's worked in banking for nearly 10 years and spent 2 years at Mintos as senior legal counsel. CFO Alexander Zvolosin has nearly 20 years of experience in banking and corporate finance. As a regulated platform, they're required to prepare audited annual financial reports according to IFRS standards, which are available on their website. This level of transparency is reassuring. Before I wrap up, here's something current investors should know about. Indemo is running a summer returns promotion until August 1st, where you can earn instant cash back on your investments. If you invest €250 or more, you get 1% cash back. Invest €1,500 or more and you get 3% cash back. And if you invest €5,000 or more, you get 4% instant cash back. That's essentially free money on top of your investment returns, so definitely worth considering if you're planning to invest anyway. Looking ahead, Indemo has some interesting updates planned. In the third quarter of 2025, they're launching a new investment model where you can invest in individual debts rather than diversified baskets of 8 assets. They're also overhauling their website and platform with enhanced analytics. By the fourth quarter of 2025 or the first quarter of 2026, they plan to introduce a secondary market for trading notes, which would add much-needed liquidity. They're also working on a mobile app and a new product that lets you acquire discounted real estate at the final stages of recovery for renovation and resale. So, should you invest in Indemo? Here's my take. If you're looking to diversify your real estate investments and want access to unique opportunities typically reserved for institutions, Indemo is worth considering. The regulatory framework provides good investor protection, the team has solid credentials, and the performance so far has been impressive. The discounted debt investments are genuinely unique in the retail P2P space. However, remember that this is still a relatively new platform, and real estate investments always carry risks. The Spanish market focus means you're concentrated in one geography, and the discounted debt recovery process can take time. I've added Indemo to my portfolio as part of my real estate diversification strategy, but as always, only invest what you can afford to lose and do your own research. If you found this review helpful, please like and subscribe for more investment platform reviews. I'll put links to Indemo and their current promotions in the description below. Thanks for watching, and I'll see you in the next video.